What's up, everybody? This is Dr. Nick with Leverage Media, and welcome to another episode of Path to a Million podcast. This is one we've been waiting for a while. The loan forgiveness application is out, and a lot of good details in here on what exactly you need to be doing to maximize your forgiveness. So, first things first, it's an 11-page document. The easiest way to do this is just type in PPP loan forgiveness application. It'll be the first thing that pops up. So what it does is it talks about how to calculate your full-time employees, what kind of documentation you're going to need, what is covered, talks about individual employee reductions in hours or in pay, but it also gives some pretty interesting ways of like, what's the word I'm looking for? Basically, getting exceptions to the full-time equivalency piece, as well as getting exceptions to the reduction in pay or in hours for specific situations. So a lot of granular detail that a lot of people have had questions about that we haven't been sure in terms of like what is going to be the answer to a lot of these questions. We were just kind of like flying by the seat of our pants. That's why I always said the best way to get 100% loan forgiveness was to keep everybody that you had before this and keep paying them 100%. That way you would never have any worries about your loan forgiveness at the end. They did give some leeway to businesses that I think will be helpful for a lot of the situations that I have heard about, whether it's, people quitting on their own, whether they get fired for cause, can I bring somebody back before the June 30th deadline? So they give a lot of detail in here. So before I hop into this, just want to see if there's any comments. If you guys have any questions or comments, specifically, drop them in below. We're going to be doing videos. I'm going to be doing videos throughout the day on a lot of like the specific questions that I found. Like I really went through and made a lot of notes on the things that I think are important that I've had a lot of people asking me about over the last 2 months or so. So we will be going into the deep dive. I'll probably do a Q&A later today. Maybe this evening, where I can answer any questions as people have started to consume some of the videos. So let me pull this up real quick and go through it. Let me put it up on my iPad here. All right. So I'm just going to kind of walk for this video. I'm just going to kind of walk through the basics of it, and then we'll get into more of the details here in a little bit. So first page is pretty much giving you all of the definitions of what they mean by different things and what the requirements are. One thing I noticed in here, you're going to need to get your PPP loan amount from not only the loan amount that the lender gave you, but also the SBA loan number. So be sure to contact your lender about that. If you did get an EIDL advance, they have you put in that amount, so that'll get subtracted from any loan forgiveness that you're going to be eligible for. It also asks if you have applied for an EIDL loan, because some of the people refinance that EIDL loan into the PPP loan. So be sure to have that information. So here's probably the most interesting part, and the thing that I think is going to be the most helpful to a lot of people, is that they have something called the covered period, and then they have the alternative. The covered period and the alternative payroll covered period. So, for example, I have two businesses, Leverage and Springfield Wellness Center. For Springfield Wellness Center, I got my money the day of a payroll. So I had to write checks. So I thought that the 8 weeks was only going to apply to what was paid out during those 8 weeks. The way, and I'll get into this a little bit more in a bit, but the way that it actually is going to work is you can you can basically qualify expenses, whether they're payroll or non-payroll, for things that you paid for inside of those 8 weeks, and then things that were incurred inside of those 8 weeks. So for example, if your utility, like let's say like my Springfield Wellness Center, the last day of the 8 weeks, if I use this date, which I think I will, because we had a payroll the day that I got the money. So I'll probably for that one use the day I got the money and then 8 weeks forward from there. For leverage though, I got the money in between payrolls. So what I'll do is I'll do the alternative payroll schedule, which will allow me to set the date that I want to start it on a couple days into the future. And then I'll be able to maximize the amount that I can pay in payroll through that. But the reason, I was gonna give you an example. So the June 5th is gonna be my last day, or I think it may be the day after my last day of the 8 weeks for my office. Let's say I got a bill for May's utilities, right? Let's say it was, let's say my utilities are like May 1st through May 31st. I get a bill on June 3rd. I can pay that bill after the June 5th time when my 8 weeks is up, as long as the cost is incurred within those 8 weeks, or you pay the bill within those 8 weeks. So that's going to allow you to kind of expand beyond just the 8 weeks of things that you're going to be eligible to pay for, which I think will be helpful for people to be able to utilize as much of the money as possible. So for payroll, I've been talking about, because they hadn't given any guidance, I had been talking about at the end, unless I heard otherwise, I was going to prepay my staff for the next, like as far forward as I could, to use up all of the money that I could, because my mortgage payment and my utilities weren't going to take up 25% of the full amount. So I was going to have a bunch of money left over. So I was going to be able to take that money, and I was hopefully going to be able to pay in the future. I won't be able to do that. So they're saying that you either have to have paid the money during the 8 weeks, or the thing that you're paying for had to have been incurred within the 8 weeks. So if you could not use the money to pay for employees' work after your covered period is done. So that's going to be a really interesting part. You're going to have to, and I'll probably do a full, like a deep dive in a video on that specifically, on the covered versus alternate payroll covered period, because that's going to be important. That could be the difference between thousands of dollars if you choose the wrong one. So you want to make sure that you're maximizing as much as possible. All right, before I go on, let me just see what we got here. John Anderson, great stuff as always. Thanks. I have 3 employees that have been out due to no daycare, but have been paying them 2/3 for the past 6 weeks. How will that affect calculations? So you have 3 employees that have been out due to no daycare, but have been paying. So you've been paying them 67% for the past 6 weeks, which I'd imagine is when you got the loans. Just give me some context. Did you get the loan 6 weeks ago? If yes, and you've been paying them 2/3 since then. One of the good parts for like somebody in your situation is normally you would get dinged for that, because you would not have been paying them 75% of what they normally would have gotten. So it wouldn't have been a big amount, but it would have been the difference between that 67% and that 75% would have reduced your loan forgiveness. In here, though, it says that as long as you bring them back to 75% or more, I believe it may be that you have to bring them back to their full amount by June 30th. I'll have to double check on that. But as long as you bring them back to their normal amount by June 30th, I think it's called like a safe harbor. What's it called actually? So give you the right terminology. It is called the full-time employee reduction safe harbor. That part is going to be important for you because that's going to be what allows you to, as long as you bring them back to full pay, full hours by June 30th, that it won't affect you negatively. It's not going to be, even if it didn't have that, you still wouldn't be affected that much in the overall scheme of things, but it would decrease your amount because you cut their pay more than 75%. Todd Sullivan, what is included in the payroll amount, gross pay, and state unemployment tax besides health insurance and retirement? Is there anything else included? No, so the gross pay, any kind of state taxes or unemployment taxes that you have, local taxes if you have anything like that, and then the health insurance and the retirement. So the health insurance and the retirement, though, there was a specific section on that. I may not have written it down, but that part is it's only it's minus the employee before tax or after tax contributions. So it's basically only the things that the employer incurs. So like, for example, if you pay half of their health insurance, only the half that you pay is going to be able to count towards payroll costs. So hopefully that helps. All right, let me start going through this a little bit more. So there's this worksheet, I believe it's a Schedule A worksheet that it's a little bit complicated. Like you're gonna definitely need to read these. They've got examples in there. They've got pretty straightforward rules, but you need to make sure that it's specific. If you have been paying the same amount of people the same amount of money, it'll be pretty straightforward and simple. There's not a lot that you have to do. But if you laid some people off, if you're paying people less than what they were making before, you're going to need to calculate it accurately so that you don't get caught there. Let's see. We just talked about the eligible payroll cost, eligible non-payroll costs. We've talked a lot about that, which is mortgage insurance, rent or lease payments, and covered utility payments, which they have they've listed it again, which is electricity, gas, water, transportation, telephone, or internet access, any service that began before February 15th. Here's one thing that I was unsure of before this came out. So that 75% threshold that you have to meet for your payroll costs, I was thinking that 75% was going to be off of the total loan amount. It's actually only off of the amount that you're asking for forgiveness for. So if you get a loan of $50,000 and you're only asking for $40,000 of forgiveness, you will only have to show at least $30,000, which is 75% of $40,000. You only have to show $30,000 in payroll, then you could have another $10,000 in non-payroll. So the 75-25 split is off the loan forgiveness amount that you're asking for, not off the total loan amount. And so if you had, for that example, if you're asking for $40,000 in loan forgiveness and you're able to supply them documentation for it, the other $10,000, you would still keep that unless you just want, well, you could just pay it back, but you still get that because remember, it's a loan. We're just asking for the loan forgiveness. That extra $10,000 will just turn into that 1% loan. Now, there are, so the House just passed, it's called the HEROES Act. And I mean, it's massive. It's really, really big. And it has a lot of rules that would be advantageous for us as the business owner on like repayment terms, more specific definitions. There's some good things in there for small businesses. I don't think the Senate's going to take it up, but when the Senate creates their own bill, they are probably going to use the things that they agree with. They'll pick those out of the HEROES Act and they'll put those in there. Some of it doesn't matter because most of us have already gotten the money and we've already started using it and blah, blah, blah. But a lot of things are going to be based on like the rules that get changed will be beneficial to people that they've got, especially if you have to pay any of the money back. So this application, you're going to just go through this. So one of the representations and certifications that you need to make are that the dollar amount of which forgiveness is requested was used to pay costs that are eligible for forgiveness, payroll costs to retain employees, mortgage interest, rent and lease, business utility payments. It includes all applicable reductions due to decreases in the full-time or in the number of full-time equivalent employees and salary hourly wage reductions, and does not include non-payroll costs in excess of 25% of the amount requested, and does not exceed 8 weeks worth of 2019 compensation for any owner, employee, or self-employed individual general partner capped at $15,385. So that means that for us as the owners, that we are not taking more than 8 weeks worth of 2019 compensation, and we are capped at $15,385. So that's an important part. The other stuff is just and yeah, the rest is just like, you know, you did your due diligence, you submitted the documentation to the lender, and then so the PPP Schedule A. This is going to be where it walks you through the exact way to come up with the accurate amount. So what you're going to do, let me get down to this. And they give pretty specific instructions for each one of these things. But as I said, I've been saying this all along. A lot of people have been wondering is you know, if I cut it, like if I remove one person and I keep the other person at 100%, does that count as like 50% wage reduction? And I've been telling people that it matters about the individual. And in this worksheet, they actually have you list out the individual people. So it is going to be based on whether you kept those individual people at those same amounts. What I'm going to have to dive into a little bit deeper and just like reread it a couple of times is the part where you could, I think you can potentially have replaced people to not affect you on the full-time equivalent headcount. But I still think that if you reduced somebody without them quitting or without getting fired for cause, I still think that those people are going to be count against you in the salary hourly wage reduction piece of it. Let me get down to. So this is the full-time reduction exceptions. So indicate the full-time exception. And the other thing is they gave more detail on the full-time. I'm sorry, not full-time exception. The full-time equivalent employee count. So the way it works is if you have, like I have 2 massage therapists. One works about 30 hours a week. One works, let's call it 10 hours a week. You take the 10 hours and you divide it by 40. That's 0.25, and then you have to round up to the closest 10th percent, right? So that would be 0.3. The 30-hour week would be divided by 40 hours. That's 0.75. That'd get rounded up to 8, and together they make up 1.1 full-time equivalent. So that's how anybody with 40 hours or more, the most you can count is 1 full-time equivalent. So that's how you're going to calculate up the full-time, because that was not explained in the beginning when you had to attest to how many full-time employees you had. So that's how you take into account those part-timers. You also can't claim like independent contractors. I believe we as owners or self-employed people, we don't count towards the full-time equivalent count. I'm gonna have to go through that part again as well. Okay, so indicate the full-time equivalent of any positions for which the borrower, being you, made a good faith written offer to rehire an employee during the covered period or the alternative payroll covered period. I'm gonna stop saying that, just the covered period, basically the 8 weeks that you're trying to get covered for, which was rejected by the employee. So on the full-time equivalent reduction, if you offered somebody their job back in writing, it has to be in writing, and it was a good faith offer, they rejected it, they would not count against you in terms, I think, in terms of the head count or the reduction in pay. Number two, any employees who during the covered period or the alternative, stop saying that, were fired for cause, voluntarily resigned, or voluntarily requested and received a reduction of their hours. In all of these cases, include these FTEs, full-time equivalents, on this line only if the position was not filled by a new employee. So if the position was filled by a new employee, like if you lost that person on the full-time equivalent head count, if you lose the person and you replace them with someone, you still have the same head count. Now, I think it's going to affect you on the salary and the hourly wages. But I think there's a safe harbor down here as well. So, like my girlfriend has an attorney that got a new job, and she put in her 1 month's notice, like kind of after she got the disbursement. So that is not going to count against her for the head count, and I believe it's not going to count against her for the salary and the hourly wage. So that's the part I still need to double check on that to make sure that that saves you on both of those, not only just the head count, but on the pay part of it as well. So let's see. Okay. All right. Reduction safe harbor. A safe harbor under applicable law and regulation exempts certain borrowers, from the loan forgiveness reduction based on full-time equivalent employee levels. Specifically, the borrower is exempt from the reduction in loan forgiveness based on full-time equivalent employees described above if both of the following conditions are met. So you'll be exempt from the reduction in loan forgiveness if you meet these two conditions. One, the borrower reduced its full-time employee levels in the period beginning February 15th, 2020 and ending April 26th, 2020. So you let some people go. And then number two, the borrower then restored its full-time equivalent employee levels by no later than June 30th, 2020 to its full-time equivalent employee levels in the borrower's pay period that included February 15th, 2020. So meaning before the February 15th piece, this is what your employee levels were at. You reduced it from February 15th to April 26th. And then by June 30th, you brought, with this, it doesn't say that you have to bring the same people back, that you're able to get back to your same number by June 30th. So so even if the problem is you'll have to wait until June 30th possibly, but to do your loan forgiveness application. But you could bring in that loan, or I'm sorry, you could bring those people back, and as soon as you get back to that level, that's when you could apply for the loan forgiveness. So that's a really important part, and I'll do a more specific video on that because I think that's going to affect a lot of people. And then the Schedule A worksheet, that's going to be where you need to go through all of this stuff and fill it out. So here are the documents that each borrower must submit, and then the ones that you need to have but you don't have to submit. So for the documents that you do have to submit, your PPP loan forgiveness calculation form, your PPP Schedule A, and both of those are in this application, so just those two things. For your payroll, you'll need documentation verifying what you paid, so either bank statements or third-party payroll service provider reports documenting the amount of cash compensation paid to employees. So that means your gross amount that you pay to them, whether it's through salaries, wages, if you do like bonuses or commissions, like if your associates make percentages, when they say cash compensation, it's just like paychecks that go out. Then you'll need to submit your tax forms. So this will be your federal 941 for the time that your covered period is in. So like mine started April 10th and it's going to go until June 5th. So that would be that would all be within the second quarter. So once I have the second quarter documents, then I would need to submit those with this. So that would be the IRS 941 form, and then your state quarterly filings. This is going to be like your wage reporting and your unemployment insurance tax filings. So basically, like Illinois has a 941 that it supplies, and then or that you supply to them, and then it also has an unemployment form that you have to file quarterly as well. So this would not include your employer contributions to FICA. This would not include your federal unemployment insurance documents. So it's only the gross pay plus any state or local stuff that you picked up along with that. All right. Let's see. Then you're going to need to have payments, receipts, canceled checks, or account statements documenting the amount of any employer contributions to employee health insurance and retirement plans that the borrower included in the forgiveness amount. So if you're not asking for things in the forgiveness, which I don't know why you wouldn't, but if you're not asking for things in the forgiveness, you don't have to include that stuff. But if you are, you need to document it. Then on the full-time equivalent employees, you need documentation showing the average number of full-time equivalent employees on payroll per month. So actually these two, you get to choose between which one you want to do. So the average number of full-time employees on payroll per month employed by the borrower between February 15, 2019 and June 30th, 2019. So you would figure out how many full-time equivalent employees you had each one of those months between February 15th, March 15th, April 15th, May 15th, June 15th, and you would average out what that average was. Then, or you can choose that same count, the average number of full-time equivalent employees on payroll per month employed by the borrower between January 1st, 2020 and February 29th, 2020. So if you've grown a bunch from 2019 and you've got a lot more people on staff now, you would, or vice versa, you'd want to pick the one that is going to be the best for you. So for this number, you want this to be whichever one is lower, and then that way it makes it easier to meet. So these are kind of setting the bar of what you need to meet to make it over. Let's see, it says the selected time period must be the same time period selected for purposes of completing PPP Schedule A, line 11. Documents may include payroll tax filings reported or that will be reported to the IRS. So again, Form 941, and state quarterly business and individual employee wage reporting and unemployment insurance tax filings. So all the same stuff that you turned in for the payroll verification, you're going to do for the, it'll be included with that. It says documents submitted may cover periods longer than the specific time period, meaning that like my distribution date was April 10th. Those documents will include like April 1st through the 9th, and then the last part of June that's not covered as well. So for the non-payroll, the documentation verifying existence of the obligation services prior to February 15th and eligible payments for the covered period. So you need to prove that you had these in place for before February 15th, 2020, and then you need to show that they were either paid or incurred during the 8-week period that you choose. So for the business mortgage interest, it's going to be a copy of lender amortization schedule and proof that you paid it, or lender account statements from February 2020 and the months of the covered period through 1 month after the end of the covered period, verifying interest amounts and eligible payments. So that, I mean, I still think you would have had to have paid it within the 8 weeks, but it sounds like you would be able to use, you would be able to pay on something that was incurred in February 2020. So like the interest payments in February through up to 1 month after the end of the covered period. And as long as you either paid it or you accrued it during those 8 weeks, it would count. On the business rent or lease payments, you need a copy of your current lease agreement and proof that you paid it. And again, or the lease account statements from February 2020 and from the covered period through 1 month after the end of the covered period verifying. Oh, you know what it is? I think it's the February 2020 is probably proving that you had that in place before February 15th. So forget what I just said. Business utility payments, copy of invoices from February 2020 and those paid during the covered period and proof that you paid them. So the February 2020 stuff is just to prove that you had these things in place on February 15th. The rest of it is it needs to be you either paid it or you accrued it within the 8-week period. Then there's documents that each borrower must maintain but is not required to submit. That's going to be the PPP Schedule A worksheet or its equivalent and the following. Documentation supporting the listing of each individual employee, including the salary, hourly wage reduction calculations if necessary. Documentation supporting the listing of each individual employee in PPP Schedule A Worksheet Table 2. This is going to be the people that make over $100,000 a year on average. Documentation regarding any employee job offers or refusals, firing for cause, voluntary resignations, and written requests by any employee for reduction in work schedule. And then documentation supporting the PPP Schedule A Worksheet F full-time equivalent reduction safe harbor. All records relating to the borrower's PPP loan, including documentation submitted with its PPP loan application, documentation supporting the borrower's certifications as to the necessity of the loan request and its eligibility for a PPP loan, all the loan forgiveness documentation and documentations demonstrating the borrower's material compliance with PPP requirements. The borrower must maintain all such documentation in its files for 6 years after the date the loan is forgiven or repaid in full, and it permits the SBA to come in and look at it. So basically, you're going to have to keep all this documentation. A lot of this stuff is not going to, you're just going to basically turn in your final work or your final answers to the lender. All this is going to get submitted to the lender, not the SBA. The banks are going to be so overwhelmed with these loan forgiveness applications. It's not like they're going to like ask you for this. They're just going to take the documentation you have to give them. They're going to assume it's right. They'll maybe do a cursory look at your documentation, and they will they'll forgive whatever's on there, I would guess, because they have no liability if they don't do it correctly. And they already said that for $2 million and above, they're going to audit them and make sure that they needed the money. $2 million and below, they are not going to audit whether you needed the money or not. That doesn't mean that you won't get audited on the forgiveness piece of it. So be sure that you were doing that correctly, because even if the bank gives you the forgiveness and then you get audited later, and again, it's up to 6 years, get audited later, they can ask for that money back plus interest, maybe penalties. So you just don't want to get caught there. Okay, DM Phillips, if the loan was under $2 million, the entire amount is forgiven without audit, correct? If the loan is under $2 million, do we need to wait until the 8-week period is over to? You have to wait until the 8-week over. I'm sorry, let me finish saying that for the people that aren't seeing it. Do we need to wait until the 8-week period is over to apply for forgiveness? So you need to be completely done before you apply for forgiveness. So if you're like trying to do this safe harbor to where you're bringing people back before June 30th to make sure that you've got the to make sure that you get the full-time equivalency numbers correct, you'll have to wait until at least June 30th. If your 8 weeks is up, but you're going to pay your utility bill after the 8 weeks is up that was accrued within the 8 weeks, you're going to need to wait until everything is all done to submit your application. Like I just said, if it's under $2 million, the entire amount is not forgiven without audit. The entire amount is forgiven based on your the amount that you do on the worksheet that you can show that should be forgiven. That will probably be forgiven regardless. But if you didn't use all the money, if you didn't use it all correctly, if you didn't use it on the right things, then it won't be forgiven. You should not put that on the worksheet, because you're going to have to show the bank documentation that you actually filled the thing out correctly. What I'm saying is the bank's not going to audit you, and they're not going to look at the individual employees and whatnot. But the SBA can come back and audit. The $2 million thing is only for the certification that you needed the money. The audit for the loan forgiveness can happen up to 6 years, and I don't think it has anything to do with the $2 million. So I don't know how much they're. I have a feeling that there were so many problems with this thing from the get-go that I think that they're going to be auditing people quite a bit. I mean, I don't know what that percentage is, but I would make sure that your documentation is right, that your math is right, and you follow their directions so you don't have to pay that back later on down the road. So, all right, if there's no other questions, I will, I've got to do some office hours for my clients right now. What is it, 12? Yeah. So I got to get going, but I'll be coming back on throughout the day to go into more of the specifics of each thing. DM Phillips, do HSA contributions count under payroll? I don't know. I would guess I would guess I would count under health insurance stuff, but I would maybe do like a Google search for that. Maybe somebody has answered that more specifically. That's maybe like an accountant or I don't do those. So any of the stuff that I don't do in my own practice, I never really pay that close of attention to until somebody asks me the question. So I would guess that the employer part of the HSA contribution would probably count if that's part of your benefits package, but I would double check on that. All right, guys, we will see you soon.